Well, hello everyone and welcome to Momentum channel. In this video, we're going to take a close look at three undervalued dividend stocks paying a dividend yield of 3.5% more. And all of these companies have been paying their dividends and increasing it, in fact, for the past 45 years plus. So without any further ado, let's get into it. The first company to review is United Bankshares with ticker symbol UBSI, traded on NASDAQ. And this company at this time is paying a dividend yielding 3.85%, and it has a dividend safety score of 79, which is considered to be safe. United Bankshares is a financial holding company primarily providing commercial and retail banking products and services in the United States, and it operates through two segments: community banking and mortgage banking. As of January 28, 2021, the company operated 230 offices in West Virginia, Ohio, Pennsylvania, Maryland, North Carolina, South Carolina, Georgia, and Washington, D.C. United Bankshares was incorporated in 1982 and is headquartered in Charleston, West Virginia. The company's stock, in terms of its volatility, is showing a beta of 1.09, which is slightly more volatile than the general market. The company has currently a market capitalization of $4.7 billion, and its last trading price was at $36.36. It was down by about 3.7% in the last trading day. Moving on, if we look closely at its dividend history, the company has been paying uninterrupted dividend for the past 47 years, and over those past 47 years as well, every year has increased its dividend year after year. Currently, the company pays an annual payout of $1.40 for its dividend, and its dividend is paid every quarter in the month of January, April, July, and October. Looking at the company in terms of its valuation, you notice that UBSI's current dividend yield of 3.85% is about in line with its 5-year average of 3.70% for its dividend. This suggests the stock may be reasonably valued today. Additionally, UBSI's forward price to earnings ratio, as you notice here, which is at 15, is about in line with its own 5-year average of 15.2. The market appears to be valuing the stock as a result, similarly to how it has been in the past, suggesting that UBSI could be fairly priced if you believe in its health and long-term prospects being solid. And if we look and compare that forward price to earnings ratio to the financial sector, which is at 11.8, it is higher than overall the financial sector. So it might be a little bit of red flag. Nonetheless, it is something for us to be mindful. And this usually, of course, happens if investors are optimistic about the firm's strong growth profile, superior business model, or the durability of its earnings stream. And we're going to take a close look at their total sales as well as their earnings. So we're going to take a close look at it in just a moment. But before we get into that, let's take a look at where the company's stock price is in comparison to its 52-week price range. In fact, the past 1 year. As you notice, it's closer to its 52-week high price. The stock's 52-week high price was at $42.31, and its lower range was at $20.86. And as you look at the total sales for the company in terms of its billions dollars, you notice how over the past 10 years, this number has fluctuated, and for the most part, it's growing. And there are some years that it appears that the sales are almost like cyclical. So for example, 2011, 12, 13, hovering around that 300 million. And then in 2014, 15, and 16, hovering around 400 to 500 millions. Then 17, 18, 19, hovering around 700 million. And then more closely, and in fact, if you look at the last 12 months, the total sales has been at $1 billion. In terms of the company's shares and how they have actually bought back their shares or have issued new shares, you notice how their number of shares is actually increasing. So some companies turn to return excess cash to shareholders by buying back their own stocks when they believe it is undervalued, increasing your ownership stake. Other firms may do the opposite and in fact issue new shares to fund growth projects. Generally speaking, though, as investors, we tend to prefer more of a declining share count. For the company, they are actually issuing more shares, and over the span of the past 12 months, you see their overall share count is at 127 million shares. All right, moving on and looking at the expectation by analysts in terms of the price target. There are two analysts on TipRanks covering this stock for United Bank shares. And of those two analysts, one of them have a buy rating and one of them has a hold rating. Overall, the suggested rating is at moderate buy. The price target for the stock in 1 year is at $42. That shows an upside of 15.5% growth. Okay, let us take a look at the second company that we would like to review, and it is no other than Walgreens Boots Alliance. Walgreens Boots Alliance is traded on NASDAQ as well, and it's traded with ticker symbol WBA. It is showing a dividend safety score of 79 for its dividend yield of 3.68% at this time. The company has a market capitalization of $43.9 billion, and its last trading price was at $50.84. Looking at the company's profile, Walgreens Boots Alliance operates as a pharmacy-led health and beauty retail company and operates through three segments: Retail Pharmacy USA, Retail Pharmacy International, and Pharmaceutical Wholesale. The company, in terms of its stock volatility, is showing the measure of 0.66, and that suggests that the company is definitely less volatile than the overall stock based on the beta measure. In terms of the dividend for Walgreens, it has been paying uninterrupted dividend for the past 45 years without any reduction. And they have, in fact, over those 45 years, have also increased their dividends year after year. They're currently paying an annual dividend amount of $1.87, and their dividend is paid quarterly on the month of March, June, September, and December. Looking at the valuation for Walgreens Boots Alliance, their current dividend yield of 3.68 is about 43% above its 5-year average of 2.56, which indicates that now could be a reasonable time to invest unless you believe that the company's outlook has weakened most recently. You typically keep in mind when the stock price has declined drastically, it could push the dividend yield higher. And if you believe that the company's foundation is still solid and it has actually the potential to come back to where it's supposed to be in terms of its valuation, then that higher dividend yield is actually justified. And you can rest assured that if they don't cut their dividend, you're going to secure that more of a nicer, juicier dividend for your investments. If you look at the forward price to earnings ratio for Walgreens Boots Alliance, it is at 10.2, which is about in line with its 5-year average of 10.7. And if you compare that to the overall consumer staples sector, though, it is definitely a lot less than that because consumer staples has a forward price to earnings ratio of 21.9. Looking at the total sales for the company, and ideally for a healthy business, we would like to see that total sales growing over time. And here we noticed that the company back in 2011 had around $72 or $70 billion of sales. And that number has gradually growing. And in the past 12 months, they have grown it to $143 billion in total sales. As for shares outstanding, we would like ideally for the company to have its number of outstanding shares to decline. For the company that we are reviewing for Walgreens Boots Alliance, and their last 12 months is showing around 868 million outstanding shares, which is definitely less than what it used to be back in 2016, 17, or 18, and the lowest in the past several years. In fact, over the past 10 years, seems to be at the lowest amount what it stands. So that's some sort of a positive sign for us as we kind of review this company, especially if you're looking for a solid dividend paying company, not necessarily the greatest in terms of the growth potential. There are 12 analysts reviewing Walgreens Boots Alliance, and of them, 11 of them have a hold rating, and only one of them has a buy rating. And the 1-year price target for Walgreens Boots Alliance is at $57.22 based on those 12 analyst estimates, and it shows an upside of 12.55%. Moving on, and if we look at the third and last company to us to review among the undervalued dividend stocks, which have been paying dividends for over 45 years plus, uninterrupted and with increasing dividends, we have a solid company here, It's no other than Kimberly-Clark. It is a very kind of solid dividend payer in terms of their dividend score, having an 88 very safe dividend safety score. It is also very much safe in terms of less volatility, because look at the beta measure, only 0.28, which shows it is a very low volatility stock. They are paying a dividend yielding 3.54%. The last trading price was at $128.69, and the last trading day it was down by 1.1%. Kimberly-Clark manufactures and markets personal care and consumer tissue products worldwide. It operates through three segments: personal care, consumer tissue, and KC Professional. Some of their product brands include Huggies, Kleenex, and Scott. Kimberly-Clark was founded in 1872 and is headquartered in Dallas, Texas. Looking at their dividend history, the company has been paying uninterrupted dividend for the past 48 years. And over all those years, they have also increased their dividend consecutively year after year. They do pay their dividend quarterly on the month of January, April, July, and October. And their annual payout is at $4.56. Looking at the valuation, the Kimberly-Clark's, with ticker symbol KMB, and their current dividend yield of 3.54% is 11% above its 5-year average of 3.19%, which indicates that now could be a reasonable time to invest unless you believe that the company's outlook has weakened. In addition, KMB's forward price to earnings ratio of 17.3 is about in line with their 5-year average of 18.7. The market as such appears to be valuing the stock similarly to how it has in the past, suggesting that KMB could be fairly priced if you believe in its health and long-term prospects being solid. And their forward price to earnings ratio of 17.3, if you compare that to that of a consumer staples, it is lower than 21.9, which is considered to be kind of a healthy sign as well. And look at that in terms of the price range for the Kimberly-Clark, they are actually trading very close to their 52-week low price, suggesting that there must have been some pullbacks in terms of the price for the stock. We're going to take a close look at their sales just to see if there are some indications there. Looking at the total sales, the company has been showing a kind of declining sale over time, of course. Since 2011, the past 10 years, they were hovering around $20.8 billion, and gradually, and seems that the last 12 months, $18.9 billion in sales is somewhat closer to that of the past several years. So not really showing much of a growth in terms of sales, but if anything, might actually be showing some decline. That might be the reason why the stock one of the reasons why the stock price has been affected and is hovering around its 52-week low price. Again, for Kimberly-Clark, maybe you're not necessarily considering this stock as a growth company, but more so as a potential for a solid dividend paying, given the fact that they have been paying their dividend, increased their dividend for the past solid 45 years plus. And they are actually buying back their shares too. So look at that. Gradually buying more back of their shares. And over the past 12 months, their overall outstanding shares is at around 341 million shares. Looking at tip ranks and analyst estimates, in terms of the analyst ratings, there is consensus for 3 buys, 3 holds, and 2 sells. So a little bit scattered there, and therefore it might not be a clear cut in terms of how analysts perceive this company, which is why we look at the price range. There are some analysts having the lower estimates of $123 for 1-year price target. On the other end, though, we have analysts expecting $159 for the higher end of range of the price, and that gives us an average analyst price target of $140.29, which, if stays true, shows an upside of 9.01% for the stock price in 1 year. There you have it, folks. A quick review of 3 undervalued dividend stocks that have been paying their dividend solidly for the past 45 years plus and have been increasing it, in fact, for all those years, year after year, consecutively. Hope you found this video beneficial and you gained something of value from it. Do let us know if you own any of these stocks in your portfolio, or what other dividend stocks you're adding right now to your portfolio. Would love to hear from you. If you gained something of value from this video, please be sure to give this video a thumbs up, and of course, subscribe to Momentum channel. Here on Momentum, we post videos every week focusing on investing, whether it's in the stock market, real estate, or cryptocurrencies, as well as videos on financial freedom. Thank you, and we hope to see you next time.